This is Matthew Cratter from Trader University, and today I want to talk about whether Celsius is about to implode. Celsius is a place where you can deposit your Bitcoin and other crypto and earn interest on it. It's actually something I've been warning about since February of 2021. You can take a look at this video. The reason this is important is a couple weeks ago I said something similar about Terra Luna and how their stablecoin was prone to a death spiral. That turned out to be correct. And now I want to warn you about what's happening with the Celsius network. If you hold coins there, you should be extremely concerned. We talk a lot on this channel about not your keys, not your coins. If you send your Bitcoin or other crypto to a company like BlockFi or Celsius or Nexo or Gemini Earn or any of these companies to earn interest, you are allowing them to control the private keys to that Bitcoin. Why might that be a problem? Well, the problem is if they get into trouble, they might not be able to give you back the Bitcoin. And this is not just a hypothetical exercise. This can really happen. There's this distinction in finance between return on capital and return of capital. So return on capital is the calculation that people make during good times. What interest rate am I making? Why am I only making 10% a year on this crypto when I could be making 30% a year? Unfortunately, the ones that have those high interest rates are the ones that are most prone to blowing up. And people are discovering that now. They're discovering that in a time of crisis, when there's a crypto crisis or a financial crisis, it's not return on capital you should be worried about. In other words, who has the highest interest rates, but return of capital. Will I even get my initial capital back if I send it to this company? The purest example of this, of course, is on the Celsius Earn page here, where they still list that you can earn up to 15%, almost 16% on UST. Of course, UST is the stable coin that turned out to be an unstable coin, unpegged from the US dollar, and is down, I don't know what it's down this morning, down 70, 80, 90%. So if you had a dollar's worth of UST, you now have 10 cents or 20 cents or wherever it's trading. This is a problem because even if you're earning 15% on your UST, if the underlying goes down more than 15%, then you have a loss on a stablecoin. So Celsius still lists this on their website. If you look through their terms of use, this is the huge red flag. And we talked about this with Coinbase a couple days ago. It's true for Celsius as well. This is the important language on their website. In the event that Celsius becomes bankrupt, enters liquidation, or is otherwise unable to repay its obligations, in other words, if you have a bankruptcy situation, any eligible digital assets used in the Earn service or as collateral under the Borrow service may not be recoverable, and you may not have any legal remedies or rights in connection with Celsius's obligations to you other than your rights as a creditor of Celsius. In other words, if you're holding Bitcoin or some other crypto at Celsius and they enter bankruptcy, your Bitcoin and other cryptocurrency will be considered part of the assets of the company, and you'll have to get in line with all the other creditors to try to get it back. And in these situations, people are very lucky. Unsecured creditors are very lucky to get 5 or 10 cents back on the dollar. So if you have $100,000 at Celsius and they go into bankruptcy and something like this happens, you'll be very lucky to get $5 or $10,000 out of your $100,000 back. Now, this is true at Coinbase as well. I talked about this a couple days ago in this video, which I will link to below. And while we're here, I'll ask you, if you're enjoying this video so far and finding it useful, to hit that subscribe and like button, maybe share this video with a few friends. Now, Coinbase is bad enough. The problem with Celsius is they have a fairly slimy history. They have a history of their CFO getting arrested on money laundering charges last year. They're basically been dropped by one of their custodians. Prime Trust cut ties with them, saying that they weren't comfortable doing business with Celsius anymore because of their strategy of endlessly rehypothecating assets. And all this means is that Celsius, in order to generate an interest on your Bitcoin or other crypto, they lend it out, and then they get whoever borrows it from them pays them interest, and then they pass it on to you. But Celsius is famous for, and this is what Prime Trust said, doing this a little bit too much. So they lend it out once, and then those people lend it out, or maybe they lend out the same collateral twice. Who even knows? But what this does is this creates a very leveraged sort of Ponzi scheme, where if one of those borrowers isn't able to return the cryptocurrency, it creates a chain reaction, and a lot of people end up getting hurt. Celsius has a history of losing money in various places where it stores the money and tries to generate a yield. Here they lost at least 120 million in the Badger DAO hack last year. And of course, the company wasn't clear about how much they lost. I think people were able to back into the number. They had money, they had UST or some other money in the Anchor protocol when there was that huge run on that, which helped to contribute to the collapse of Terra Luna and UST. So this is what they're doing with your money to earn a high interest rate. They're doing very, very risky things. And this is the environment where it's going to come back and haunt them. Now, you might say, well, I'm sure they have an insurance policy, so I don't have to worry too much. If you go to the Celsius Network website, you can read this. Celsius does not have an insurance policy. They do not have insurance for your assets. They do have insurance under their custodian, a company called Fireblocks, which provides insurance on any assets that are being held there that are not earning any interest. So if you want to trust Celsius, you have to trust Fireblocks. I went to their website and was unable to find out how they do reinsurance and how much insurance coverage they offer. So we don't even know if they're covering 10 cents on the dollar. We don't know if Celsius has full insurance on the assets that are being held with their custodian, Fireblocks. But here's the next important line. However, we generate interest rewards by deploying assets, in other words, by rehypothecating their assets, but lending them out for interest. When these assets are out of Celsius's control, they cannot be insured by such insurance. So there's no insurance for most of the money which is out there earning a yield. So what they do is they do something called over-collateralization. To ensure coin loans are always returned to Celsius, we require borrowers to post collateral of up to 150%. It doesn't say they always do that, but what this means is if you want to borrow $100, you have to put up $150 worth of collateral. This doesn't offer very much protection in an environment like this, because if the underlying asset goes down 50%, this $150 or 150% becomes 75, and so the underlying piece has lost 25%. And this can obviously get very bad if you have a Terra Luna UST type of situation. So this is why these services are so risky. You're taking tremendous risks. There's been a lot of documentation on Twitter. I'll link to this. All these Celsius users complaining that they're having trouble getting their money out of Celsius. So what we might be seeing here is the modern equivalent to a bank run, a run on the bank where there's not enough assets and people who have accounts at Celsius are trying to get their money off. The clearest sign that this company is in distress is the behavior of their company token, the Celsius token, which was the product of an ICO and is almost certainly a security. So they've got that problem as well. You can't just issue securities without registering with the SEC. But the greater point here is that their token has been in a free fall since the beginning of the year, or really since the middle of last year. It started 2022 at about 4.38 and now is trading at 70 cents. And it's plummeted quite a bit over the past week, which is why I'm mentioning it here. This is a sign of distress at the underlying company. It might be a sign that something is wrong as well. And someone who knows something and holds Celsius is dumping their tokens as fast as they can. I think it's quite ironic that even their token sounds like CEL. So the ticker is CEL, looks a lot like CEL. I'm not recommending that you do anything here. I don't own any Celsius tokens. Obviously, I think they're garbage. This is an investment advice, though. So definitely don't interpret this as investment advice. And even if you want to be really aggressive and short CEL, I don't recommend it because it could go up. It could double from here on its way to zero. But this is definitely a sign of distress at the company or in the markets. This is important because we do know that CEL makes up a large portion of the asset side of their balance sheet. I was unable to find out exactly the amount online, but their CEO, Alex Mashinsky, has this history of not being completely honest, in my opinion. That's just my opinion. He's probably a great guy. Here is an old tweet from November of 2020 where he said that their balance sheet was really strong. They had $600 million worth of cash plus their tokens. He doesn't break that out. So I would guess that this is, if you're trying to reassure people, you would tell them that this was all in dollars. But he says this is a combination of cash and their CEL tokens. $600 million worth. This was November of 2020. That was, the chart here doesn't go back quite that long, but the token appears to have been trading somewhere around $6 at that point. So it has since lost more than 5/6 of its value. And this is a problem if it's a large percentage of their balance sheet, because it means that the company risks having liabilities that are more than their assets. And this is how you enter bankruptcy. And again, what happens when Celsius, or if Celsius goes bankrupt, you might not get your coins back from them, and they have no legal obligation to return them to you. The other problem with their token CEL going down so much is that their customers own a ton of this. This is how you can get paid a higher interest rate at the company. You agree to get your interest in CEL, and there's this sort of hodl culture over there. Unfortunately, this has completely impoverished their customers. And if you impoverish your customers, that's not a very good thing for business if you make your own customers poor. Here's a nice selection from Corey Clipston, an unhappy customer from Celsius, who used to be a happy customer. This is from just the past few days. And this is what that customer says. I love the Celsius network and its vision. In fact, I've been a huge fanboy. Basically did everything and chose to earn 100% of his interest in CEL to support the community. He actually bought extra tokens when it was over $5 because he believed so much in it. But then he discovered, as a lot of people are discovering, that tokens are not equity. They're not tied to the company's progress on the upside, so the insiders can get really rich with their stock and the token could still go nowhere, etc. And so he's unhappy that he didn't figure this out sooner. I feel that we were sold an illusion that CEL token was valuable because it was linked to a valuable growing company. So this is how you end up with a class action lawsuit when you have old customers like this saying that they feel betrayed by the company, and said they were blinded by their faith in Alex, the CEO. This is really important, not your keys, not your coins. I'm not just picking on Celsius. Don't keep your Bitcoin anywhere except in cold storage, unless you're using it, unless you have a small software wallet you're using for day-to-day purchases. But your savings, your life savings, you don't want to store them at Coinbase or Gemini Earn or Celsius or Nexo or BlockFi. All of these companies rehypothecate your Bitcoin. And I assume that all these companies, certainly Celsius and Coinbase, in the event of bankruptcy, you will have a lot of trouble getting your coins back. Keep your Bitcoin on a hardware wallet. I talk about how to do that in these two videos. The best way to store small and medium amounts of Bitcoin, as well as the best way to store larger amounts of Bitcoin, which would be a multi-sig solution using multiple signers. But the important point here, keep an eye on the CEL token, what's happening. I think this is a sign that the company may be finally imploding. I don't wish Celsius any ill will. I hope they survive and do well. The only purpose of this video is to warn customers of the risks, customers of Celsius of the risks, so that they can make their own evaluation and decide what to do in this case. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.